Welcome back to the Brent Bruce Daily for November the 3rd, 2022. It is now 3:57 p.m. Central Time, and we need to talk a little bit about what happened yesterday, what the kind of effects are today as the markets are digesting this information, what we've kind of seen. And then we'll take a look at the charts and where our interest rates are now after 24 hours from the announcement from the Fed. So basically what happened yesterday is we saw the markets hear about the 0.75% increase to the Fed funds rate, and they really liked it. You saw the mortgage-backed securities start to rally, and things started really looking like they were going in the direction that we wanted them to go. The 10-year was coming down as well. After they heard the comments from Jerome Powell, basically with the way that it is being described is that in looking kind of into the comments and kind of the demeanor that he had during those comments, they felt that he was feeling that they weren't getting inflation under control as quickly as they needed to, making comments that they were even willing to go further than they wanted to go if it was necessary. So they would rather go too far than not far enough with their monetary policy increases. Now, this is just not really what the markets wanted to hear, and we started to really turn the corner and started to drop. The mortgage-backed securities dropped very quickly, and they have continued to decline here today. All right, so let's take a look here. The good thing we're not at 58. We're going to get the market update for the moment here and take a look at the charts, but we are losing ground today again. We're down 28 basis points. We were down more like 50 earlier in the day, so that's good to see the market pushing back. Currently up 9 on the 10-year Treasury at 415. So really not what we want to see. We were not able to break above the 25-day moving average. Now we're kind of hanging out here in this range right in the center of this wide range of a ceiling and a floor. So really what are we going to be looking out for tomorrow, right? What is going to make the difference? So we need something to push us in the other direction. And I think what it's going to be, if things work out, let me move this over here. If things work out, hopefully we're actually going to get an unemployment number tomorrow that shows unemployment is growing. So we want a bad jobs report to come out in the overall economy. If you have a bad jobs report, that is actually an effect or an indication that we are turning the corner a little bit and the market is slowing, and hopefully the inflation is going to be coming down. It's kind of an indicator of that we've seen in the past. So if we get an unemployment number that shows unemployment really kind of worse than we want it to be from a general economy level, that actually might help home loan interest rates and start to push those interest rates back down. Because taking a look here at the Brent Bruce Daily for today, let's go ahead and run the scenario here and take a look at where we are. Remember, we ended yesterday at 6.99% on the Brent Bruce Daily. Again, this is a very well qualified 30-year fixed conventional home loan with 800 FICO score and 25% down. And now we're at 7.125. Okay, so we are up now into the sevens after not a problem with the announcement from the Federal Reserve as far as the increase in the federal funds rate, but more so, and it was very clearly indicated by the way that the market moved, more so because of the comments and the tone that came out from Jerome Powell, making us feel that they weren't seeing that inflation was getting under control. Now, so there we are at 7.125 on our Brent Bruce Daily. Let me pull this up right quick here, and I'll make my last comments for today. So you can take a look at the parameters there. All right. So what we need to be thinking about is, why is Jerome Powell making those comments? Do we still feel that inflation is growing? And I really don't think it is. I think things are slowing down. But remember, they just got out of a meeting for 2 days, so Tuesday and Wednesday, before they made their announcement, going over charts and data and having discussion. But again, they're looking in the rearview mirror. They're looking at charts and data from months, weeks, or months ago. And we know that the economy is just moving much more quickly. I mean, where were we a year ago today? We were in a totally different position. Where were we 6 months ago from today? We were in a very different position. So they're looking at reports that are dated. And this is something that we hope they'll start to get a little bit more wise to, that they need to be looking at more current data, or just, again, pausing. Hopefully after the increase in December, they will just pause and wait for a few months to see where the numbers are. Let those reports come in, and let those reports continue to show that we are getting inflation under control, that it is subsiding, and allowing then home loan interest rates to follow suit. So not what we wanted to see this week, not what I was hoping to see this week. Unfortunately, that might delay some of the rates coming down here in the end of the year and into the first quarter. But we're going to keep an eye out. I'll keep you posted, and we'll talk to you again tomorrow. Have a great day.